Hi, this is Arthur Hill, Senior Technical Analyst with StockCharts.com. It is Thursday, February 7th. You are tuned into On Trend, the show designed to keep you on the right side of the trend, be it short or long. All right, it's always an interesting time to be in the market, and I think the moment of truth has arrived for this counter trend bounce, and we're going to review the longer term picture as well as the breadth indicators first up. We'll also look at the finance sector. It's hitting a moment of truth as a number of key stocks stall. I think the home builder ETF is looking vulnerable, as well as a number of housing stocks, and we'll look at those in detail. And then we're going to do a little tutorial on the Bollinger Band squeeze. We're going to show you how to chart it, how to scan it, and how to analyze it using candle glance charts. Well, folks, this is it. The moment of truth has arrived for the market. So we had one heck of a rally since December 24th, and now, well, we've been at the moment of truth for a while because we've been in this consolidation zone above the 50-day but below the 200-day. And, you know, as I've said time and time again, this decline here from October to December is the bigger force at work here on this chart. All right, this advance, as impressive as it is, still pales relative to that prior decline. In addition, you can see the December high there. We haven't taken that out. We're right at the 200-day for the S&P 500, and we were right in this prior consolidation zone. We can throw in a number of other items over blah, 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 right for a pullback. But, you know, I think the best case scenario is we get a little pullback to that 50-day, to the 2600 area, and then get a bounce. All right, that's the best case scenario. Of course, the worst case scenario is that the bear reasserts itself. And probably the base case is that we just have a big, choppy, ugly trading range. But if you look down the road, down the market cap scale there, you can see mid caps are below the 200-day and in that range. Small caps are below the 200-day and in that range. And then the NASDAQ 100 is right at the 200-day, but in that range. And this is kind of a no man's land, all right, where, you know, the bulls have had their run, but the bears are also still in control of the bigger trend. So this makes it an ideal spot for a potential reversal. Now we're going to go a little bit more short term for some clues that the rally may be fizzling. I've showed this chart before, and it's basically the percentage of stocks, or the 80% indicators. All right, so you have advances minus declines divided by total issues. And you want to move above 70% to show strong buying pressure. And so you can see on May 24th, with that green line, we had all of them move above plus 70%. That was a first breath thrust. And then we got a second breath thrust there in early January, and some of the indicators like Zweig breath thrust started triggering. So the market was in good shape until you can see on the 18th when we got that downward breath thrust in the S&P 1500. We moved below minus 70%. And you can see that we haven't been above 70% since. And if you look down the scale here, you can see the S&P 500 is not, but it didn't get that bearish thrust there. But if you look at mid caps, they had a bearish thrust and they haven't recovered. And small caps had a bearish thrust there and haven't recovered. So I think that, you know, things have been on thin ice since January 18th. And until we get another thrust above 70%, I think the bulls need a rest here at least. Now, the next indicator I've been watching is the percentage of stocks above the 20-day EMA. And we've got this for the S&P 500, the S&P Mid-Cap 400, the S&P Small Cap 600, and the NASDAQ 100. And this is a breadth indicator. And you can see we have been above this 70% threshold for quite a while, all right, over 3 weeks. And that means the short-term uptrend has remained strong. And that is true for mid caps. Small caps for the most part, you had 1 day below, and the NASDAQ 100. But once we start seeing moves below 70%, that will tell you that the short-term uptrends are turning down. Stocks are moving below that 20-day EMA, and that could be the sign that the pullback is here. Now we also have this indicator available for the 11 sector SPDRs. And as reflected with the S&P 500 indicator, you can see that these are all above 70%. Technology, finance, consumer discretionary, and industrials. But there is one that is below 70%, and that is communication services, just below at 69.23%. So I think by definition, short term, as far as the breadth indicators are concerned, this is the weakest sector right now, communication services, even though it exceeded its early December high because of that big move in Facebook. But if you look under the hood and you look at all the components, Google is failing at that December high. And Twitter, I think, reports very soon here, so that'll be one to watch here. Elsewhere, healthcare is remaining fairly strong, above 70% as well. So when we start to see the majority of these big sectors, 3 or 4 out of the 6 move below 70% for this indicator, that's going to tilt the balance towards the bears short term. Now we're going to look at the finance sector and some key industry group ETFs as well as stocks because they have hit a... All right, so I've got a really unique chart to show you here. I've got the finance sector and I've got a number of breadth indicators below. And this is what's unique here at Stock Charts is you can break down the sector by these breadth indicators. You can do it for all 11 sectors, and that gives you an idea of what's happening inside the sector, not just based on the top stocks, because we know that the sector SPDRs are driven by the top stocks. Now, if you look at the chart here for XLF, look at this. You have a support level, and it held a number of times in 2018. And then you started breaking below. You had another test in November, and then we had the plunge to new lows. And now we've come all the way back up, and this big support zone turns into a resistance zone, and there's the 200-day moving average. This is an EMA. It doesn't really matter, EMA, SMA, as long as you are consistent and you use the same one across the board. I'll switch this back to an SMA because I pretty much just use SMAs. And I don't use them for like support or resistance. It's just basically when you're above it, you have an upward bias, and when you're below it, you have a downward bias. The longer the moving average, the longer the bias. So a 50-day moving average would have a shorter term bias than a 200-day moving average. But the main point here is that we are at an inflection point for finance. All right, this is where this rally will make or fail or will continue higher and break out. So right now, with the bigger trend down, I would expect a failure here and at least a pullback to that 24, 24.5 area, and then we'll see what happens from there. Now, about those breadth indicators I was talking about, the first one's 10-period RSI. That's not a breadth indicator, obviously, but I'll just keep it all on the chart here. So if you go over to the left side of this chart, there you can see the symbol GT20XLF. That's the percentage of stocks above the 20-day EMA. And then you have the 80% indicator, the 10-day EMA of 80%. And then you have high-low percent, which is a number of new highs and lows. And then you have the percentage of stocks above the 200-day EMA. And you can see on each of these symbols here, you have XLF at the end, so you can just substitute out your sector SPDR symbol on each of these to get the other sector symbols. So, I would do XLK ADP for technology advanced decline percent. And so I do a 10-day EMA to smooth this out. And it did get above that 30% threshold, so technically that's bullish. But I like to see 2 of the 3 longer-term indicators turn bullish. And you can see high-low percent has not been above 10% yet. So we don't have very many new highs coming out of finance. We need to get that above 10% to get bullish. And look at the percentage of stocks above the 200-day EMA. It's below 40% right now. So that tells me longer term, the evidence is still bearish. And then we look shorter term, we can see, well, a lot of stocks are still above the 20-day EMA, 92%. So in order to signal a downturn in this indicator, we need to get a move below 70%. And for a downturn in momentum, we need to get a move below 50 in RSI. So if those two things happen, I think we're at least getting a pullback, if not, starting to work our way lower towards that December low. Now there's a conundrum, and there's been a conundrum for, quite a few weeks here, because we've got this longer term downtrend. This is the broker-dealer iShares. And then we got that acceleration lower, and we got this really sharp snapback rally. So we have a sharp advance, and we have a flat consolidation. And these next charts are going to show that basically. So, short term, technically, this is a bull flag, and technically a breakout would be bullish. But the problem, and the big problem, is the long-term trend is down. We're below the 200-day moving average there. We haven't even cleared the last reaction high, and we hit a 52-week low there in December. So as far as I'm concerned, the longer-term trend has more sway than the shorter-term trend. And, if you break below flag support there, that's going to argue for at least a pullback, all right? If not, a test of that December low. Now, I'm very hesitant to make projections on the upside or the downside. Take the signal and go with it as long as it lasts. Look for something that proves that signal otherwise. So that would be the signal here, that support break. We look at KRE, we can see a similar situation unfolding. You got the big advance, you got the flat range. It's not an ideal flag, but the essence is there. A surge, some sort of consolidation, a break to the upside is bullish, but a break below 52 is going to be bearish. Then we look at some individual stocks. We've got Bank of America, similar situation. It's not a tight flag, and we're battling that 200-day, but we did get a gap down last week, and that gap is pretty much holding. So watch out if you break 28. That's going to argue for at least a pullback. You look at Goldman Sachs. Goldman Sachs has not participated in the market rally over the last 2 weeks. The market continued higher, but Goldman Sachs was flat. So you got to watch if you break support here. That's going to argue for, at the very least, a move towards that 175 area, I would think. JP Morgan, another one. They're all consolidating. All right. And there you can see the lines to watch there for JP Morgan. And finally, Morgan Stanley. And it had this kind of, reversal here over the 3 days here, but I'm choosing to ignore that spike there and instead just focus on this tight little consolidation. And if you break down there, that's going to be a bearish development for Morgan Stanley. It didn't even get back to the 200-day, so it's one of the weaker of these finance-related stocks. So now we're going to look at housing because we had little flag breakouts in ITB, but, with the market looking vulnerable all of a sudden, keep in mind that overall ITB is not the strongest group. So we need to watch this one closely. So when you sit down and look at a chart, 3 things are possible. And I got this from David Fuller of Fuller Tracy Money years ago. It's a gem. There are 3 possibilities, all right? First, you see what you want to see. So maybe you're long, so you're looking for bullish things on the chart. That's possible. The second possibility is you see what you think you see. So maybe you see a head and shoulders pattern or a double bottom. And the third is you see what's really there. Now, to be honest, the third possibility, seeing what's really there, is only clear in hindsight. Chart analysis is it's subjective basically. Now, we try to put objective measures in there. Are we above or below a moving average? That would be bullish or bearish. Is RSI in its bull range or its bear range? So we try to do that. Did we break resistance? But it's still a bit of subjectivity at the end of the day. Now, short-term, tactically, I saw a bullish setup in ITB. You had the big surge, you had the flag, and you had the flag breakout. All right, but now we're stalling for 3 days, and then we started moving lower yesterday. So this tells me to be on guard because, the longer-term trend is down. All right, we're still below that 200-day moving average. And let's see what happens if we do some more annotations on this chart. Let's see if there is a different thesis out there working. So first of all, we had that big decline. We call it from the June high all the way to the December low. And I'm going to color that with a gray, and I'm going to make it thin. And I just want to see. So we retraced around 50% of that decline, which is normal for a bear market bounce. All right. The second thing is, I'm not too thrilled about, steep trend lines like this, but, it's subjective in a way. This is a potential rising wedge, which is typical for a counter trend bounce. But I think the third and the most important thing is support here. All right. And if that gives way, and we'll color that green because it's support. So if that gives way and we break below support and the 50-day, it's back to the bear or the long-term downtrend for ITB. All right. So I'll go ahead and erase this because when you see a flag breakout and you take a trade, you need to know what is it going to take to prove that trade otherwise. When am I wrong? When am I getting out? And so now I think we have to think very hard about this because this is a tactical trade. It wasn't a longer term trade at all because, the long-term trend is clearly down and you had a 52-week low there. So even though we got above this high, I would be very careful here with ITB. Now, of course, an ETF is only as good as the holdings within the ETF. And so I went to Google and I searched for ITB ETF holding, probably could have been holdings. And then if you go down this list of results, I would suggest you skip anything that is not from the Fund Family website and go to the iShares website itself. That is the provider, and so they will have the most up-to-date information. And if you go to the iShares website, you can see the holdings. There's a link for the portfolio, and it'll take you down. And you can see the top holdings are Lennar and DR Horton. These two account for like 26%, 26.5% of the ETF. So they're the key ones to watch going forward. And I'm also going to look at Pulte as well. So this is DR Horton, a home builder, of course. And, kind of like finance before, you see this support zone that held 3 times, and then you got the big break. And then you got resistance just below that zone twice. You got into the zone in January, and we're failing in it here in late January, early February. So this big zone, it's broken support, turns into resistance. This is a classic point function of technical analysis. I don't think it works as good for indexes or ETFs because they're driven by a bunch of different stocks with different weightings, but I think it works better for individual stocks. But you can see we've got this big surge, we got this pullback, tried to get a bounce, but the bounce is already stuttering. So I'd be very careful here. And if we break that 50-day, it's going to be back to the downtrend for DR Horton. Here's Home Depot. So Home Depot, short term, we see reason to be bullish with the pennant breakout. But longer term, you can see this prior support zone turning into a resistance zone, and we're back at it. And then, of course, we had this very big decline, and now we've retraced 50% of it. And we're in that 50 to 62% retracement zone. So when you get into a zone like this, after a big bounce, I wouldn't feel comfortable initiating a position here. You got to feel comfortable when you're getting into something and, at resistance, below the 200-day, in a retracement zone. This is just asking for trouble. So I would watch this one very closely as well. And then Lennar. So this is kind of what we drew on the ITB chart. You can see we're in that 50 to 62% retracement zone. We're right at the falling 200-day moving average. It's a potential wedge. And if you break below 43, then Lennar has reversed its uptrend and it's signaling a continuation lower. And don't forget, it hit a 52-week low about 6 weeks ago. So there's really not much evidence to suggest the long-term trend is up. There's more evidence to suggest the long-term trend is down. Here is Pulte Home Group, and they got a little bit higher, got above the 200-day and just above that 61.8% retracement, and had that nice little flag breakout, but fell back, tested the breakout zone. That's okay. And then bounced, but the bounce is not taking off, all right? Instead of, moving higher, we already started moving lower. So this one is looking vulnerable to a breakdown here. All right, now we're going to dissect the Bollinger Band squeeze and show you how to chart it and analyze it. So I was going through my charts and I noticed a few Bollinger Band squeezes out there. And so I decided to run a scan, which I'll get to in a moment here. But here's a chart that I would use to show the Bollinger Band squeeze. All right, on this chart, you can see that we've got Bollinger Bands in pink, and they are squeezing together. I've got Bollinger Band width in the first indicator window, and that measures the distance between the bands there as a percentage of the close. So it's below 5%, which is my threshold. I want to see it below 5% to show a squeeze. And then the third indicator is percent B. You can see the indicator names on the left there. And percent B tells you where the close is relative to the upper and lower Bollinger Band. So when the close is at 0.50, as it was here in early January, that means you're near the middle band, which is a 20-day moving average. All right. But you can see when you move above 1, as we did on January 14th, you're above the band. And so what I'm looking for is I want to make sure the band is squeezing and prices are still within the band. And so I would like to see percent B between 0.8 and 0.2. All right, if it's below those levels, then it's starting to move outside the bands. Not quite yet, but it's starting to do that. When it goes below 0, it's moved below the lower band. You can see that here in October when we move below the lower band, and percent B moved below 0. And then you can see we moved above 1 here in late November, and we were moving above the upper band. So how do these indicators look? Well, if you go down to the section here on the Sharp chart, you can see how I put all this together. I put the Bollinger Bands on as an overlay, and then for the style, you can see I've got area, and then I colored it pink, and then I set the opacity at 0.3 so they don't totally cover up the price action, so they're translucent or transparent. All right, and then for the indicators, pretty simple. Just added Bollinger Band width and percent B. And then I added 2 horizontal lines, one at 5 for Bollinger Band width to see when it goes below, and 2 lines at 0.8 and 0.2 to see when percent B is within those boundaries. So I've got this chart style here set up how I want to see it. And what I'm going to do is I'm going to go down to the chart styles section here at the bottom. And I want to replace this chart style and put it as my candle glance chart. So I'm going to click that replace button and I'm going to replace candle glance. And the chart style that's named candle glance is going to be my default chart style for all candle glance charts that I see. And you'll see why I'm doing that in a second when we look at the scans. So this scan is super easy. All I did was put the group up there. I just want S&P 500 or S&P 400 or S&P Small Cap 600. I want the close to be above the 200-day and uptrend. And I want the minimum of the Bollinger Band width to be below 5. And I want percent B to be below 0.8 and above 0.2. Very easy scan to write. And you can check this video on YouTube if you want to see that scan in detail. And if you need to find any of the indicators, there you can click the drop down there and you can go and find, there's Bollinger Bandwidth and there's %B. So click there and then click Add to add that to your scan. All right, so when you're finished writing your scan, you can click the Check Syntax button at the lower left to make sure your scan code is all right. And it is. I'm going to click Run Scan, and I'm going to get the results. And so I've got 24 stocks making that scan. And what I can do is I can put these into a chart list. And so I've got a chart list. I want to replace an existing chart list with these results, and I've got a chart list called Scan Dump, and I'm just going to put them in there, and they will be in that chart list, and I can look at all these charts. So I'm going to click View List As, and I'm going to change Summary to Candle Glance. So now you can see why I changed my Candle Glance default style, because I want to see all of these as small candle glance charts with my Bollinger Band indicators. And next we're going to single out a few of these. So here are the 4 that I like out of this group. All right, so we'll just go through these candle glance charts, and it's really a personal preference. I don't have any idea which one has the most chance of working. With all signals, they pretty much have the same chance of working. The ones you have more confidence in usually don't end up working, and the ones you have the least confidence tend to work. It just seems to work that way. But you're going to get stocks like Belmont here, and clearly this is some sort of takeover, so you're going to ignore this one. Same with Celgene. Bristol Myers Squibb gave them a buyout offer, so you want to ignore that. You need to check on those things. But if you look at Alaska Air, the airlines have been strengthening a little bit, and it's just above its 200-day. It's consolidating, so watch for a breakout there. And airlines aren't that correlated to the rest of the market. They seem to go wherever they want. Biogen might be an interesting one. It looked like it had a little flag pattern working there, and it was trying to break out, but it fell back yesterday. So maybe it's going to fall back again. But, as far as the signal is concerned, John Bollinger was looking for a move above the upper band to get that breakout working. Then we have Disney. That's another one to watch. It moved above the upper band, but didn't close above the upper band. So a little bit more work to do on Disney. Moving further down the road or down the chart list, I'm going to go to Live Nation because this one is above its rising 200-day moving average. And you can see we got this consolidation after that advance. And if we get a breakout there, that is going to be a bullish development. And finally, we have Walgreens Boots Alliance. Now, this one just got clobbered here, but it did manage to firm. 200-day has a slight rise to it, and you can see we've got this consolidation working here. So you've got a clear upper band to watch there, and if we get a breakout there, that is going to be a bullish development for Walgreens Boots Alliance. So where can you find the recording of On Trend if you want to go back and see that scan? Well, first of all, if you go to Stock Charts TV with a link at the top, you can see Grayson is currently presenting. If you go down to the bottom, you will see the schedule that's coming up. And on the right side of these shows, you have a link to our YouTube channel. So when you click on that link, you'll be taken to the YouTube channel for Stock Charts. And if you scroll down, you'll see all the different shows. And under morning shows, you can see On Trend with Arthur Hill. And if you click on that link, you will see the videos on the right that I have put out over the last few months. All right, so that concludes On Trend. Thanks very much for tuning in and have a great day.